The Federal Reserve will deliver its first interest rate decision of the year this afternoon. It precedes comments by the Fed Chair Jerome Powell in a regularly scheduled press conference at 2:30 p.m. Eastern. For more on what we can expect from the Fed, I want to bring in Harvey Flax, Director of U.S. Interest Rates Futures Business Development at the parent company of the New York Stock Exchange. That's Intercontinental Exchange, or ICE for short. Harvey, welcome.
Good morning, Kristen. Thank you for having me.
Great to have you as always. Certainly a timely segment today. What are the futures markets indicating about today's meeting?
Sure. So the futures market's pricing in a near 100% probability that the Fed will remain on hold this afternoon, keeping their monetary policy rate at the current 4.25% to 4.5% range.
It is interesting, of course, in terms of the market views on shorter-term Fed policy. What do you see those as?
So at the December meeting, the Fed released their summary of quarterly projections, and known as the dot plot, and that indicated that the Fed anticipates implementing 25 basis point rate cuts this year, with I guess employment and inflation more or less I guess in check where the market believes it should be at this moment in time. The market is anticipating that the Fed will remain on hold in the short term. It will retain its easing bias, but it will have a cautionary outlook as it waits for the new administration's policy initiatives to roll out. Now, they are pricing in a 30% probability that the Fed will lower rates by 25 basis points at its next meeting in March, and the first full 25 basis point cut for the year should take place at the June meeting.
Interesting. So that gives us about 6 months of a headway here. Harvey, when we think about longer term, what are those market views when it comes to the Fed policy, and why?
Sure. So after the June meeting, that second 25 basis point full cut is priced in to take place in the fourth quarter. Right now, it appears to be at the October meeting. Now, looking at 2026, the market is actually pricing in, indicating that the Fed will remain on hold for almost the entire year, pricing in a single 25 basis point rate cut to take place at the very end of the year at the December 2026 meeting. Now, Fed monetary policy is basically driven by two metrics, employment and inflation. And of course, GDP is certainly factored into the equation. Now, I guess with the market's bias towards a neutral Fed for all of 26, it's indicating that it's cautious about the implications of the new administration's policy decisions, certainly around tariffs, taxes, as well as the deportation process, immigration. Of course, this is early days. The immigration process has begun. The tariffs have been signaled to be announced, or targeted tariffs to be announced as soon as February 1st, and tax policy is expected to be known somewhere in the second quarter. Now, the market will closely assess and watch any downstream impacts to the Fed's dual mandate of these policy decisions, whether positive or negative, and of course they will price in any future implications to Fed monetary policy based on those assessments.
Harvey Flax, Director of U.S. Interest Rates Futures Business Development at Intercontinental Exchange. Harvey, thank you.
Thank you, Kristen.